right, it's Crypto Leverage Trading Group. Everybody's doing well. 8:30 Tuesday morning, Altcoin Tuesday. But we're going to talk about Bitcoin. Why? Because there's still been a lot of questions as to why we are here. Okay, how we got here in the last few weeks, why we're here, what needs to happen, what we need to unwind, what basically traders just need to accept. And then obviously now we also have the narrative. It's pertinent in this range, and that's death cross. Otherwise, I call the cross of death. Okay, it's really not death. Okay, it's not as reliable as people actually think. If you go back and look at a lot of the crosses that have occurred, especially in the cryptoverse, and that death cross is when your 50-day, your lower time frame, your 50-day moving average falls below your prevailing trailing 200-day moving average. Okay, that it crosses on your chart. But while so many people are focused on that, there are still trades to be had. You should always hedge in this environment between 40,000 and 44,000. You should have a hedge open in your Bitcoin as a protection. A hedge is the opposite of what, you may have. You may be long in your stack or in your bag, meaning you're hodling your Bitcoin, but you may also open, like say, a 1x leverage trade down to add a layer of protection to your long stack or bag. That's a common practice, okay? 1x leverage is very, very, low liquidation, ridiculously well below anything you can imagine Bitcoin getting to, okay? And it's just an inexpensive hedge so where you don't have to sell your Bitcoin and then buy it back, obviously lower if it does go lower, when you're on that support level. And that's really where we're at, mates. And I want to show you this is why 40,000 has been a critical level for me on where I'm really not concerned unless that breaks. I was very, very concerned going into the weekend. Had a few calls with a couple mates in the group talking about Bitcoin and just talking about that level, because had we closed below 40,000 on the weekly stick on Sunday going into Monday morning, I really think we probably would have seen 38 to 37,000 on a wick or a dip on Monday. But that did not happen, okay? So let's go back and look at the middle of December, okay? This is where we started with the wicks hitting 45 to 45,000 channel, okay, on the dips. And then we did it again on December, and we ran all the way up, okay? And then we came down on the 29th of December to that same level again, okay? Then we came down to that same level again on the December 31st, going into the new year. We got a little bit of a retracement. We came back down to that level again. 1 4-hour, 2 4-hour, 3 4-hour on wicks, until finally on the 5th, we broke through that level at 45,000. Why we broke through that level on 45,000? Fed FUD, Kazakhstan, whatever, Kazakhstan FUD, mining FUD, all that, within 24 hours, more or less, and here we are. Okay. Where we are now, relative to that, is, I'm going to raise this up a little bit. You can see where we are back here to get a little better indication. So we were here, we broke through that, we've come all the way down. Now we've done the same thing again in that 40,000 channel that I was talking about. Again, we're on the 4-hour, okay? We're not on the daily or the weekly, all right? We're on the 4-hour. We keep bouncing off. Look at these wicks. All keep coming off, the exception of this one, okay, that fell below it, but got bought up rather quickly, okay, on that 4-hour stick. So I invalidate that. I don't factor that in at all. And now we're back above, okay? And so that's where we are now on the 4-hour chart for Bitcoin. So we're in that. Now people are talking 50, 200-day moving average the last 24 hours. I'm looking at the 7-day at 41,857 and the 21 here on the 4-hour at 42. So if we get above 41,857 today on the 7-day here, that's going to also trigger another move